This week on the Retirement Quick Tips podcast, I'm talking about the Micciche Family Money Principles. It's a framework I created back in 2019 that really helps to guide the financial decisions our family makes, both large and small. Today, I want to talk about wealth and estate transfer. Actually, this topic is really what inspired me to dedicate this week's episodes to these money principles, because I had a client I was talking to and they were asking me my general thoughts on, is it better to give to our adult children now to help them with some of their needs now? They have young adult children in their 20s and 30s, and they have legitimate needs now, like wanting to buy a house and paying for college and student loans and things like that. And so I told them my thoughts on the matter, which is I think that giving during your lifetime, especially at those points in life where children need it and appreciate it, and I'm trying to buy a house and I would like some help with the down payment, that's a great time to give. If you wait until you kick the bucket to give anything to your children, then they only receive an inheritance. And a lot of times, the timing can be right, but the timing is unpredictable. You may live to be 90, in which case your children may not receive their inheritance until they're 65 or 70, and they could have benefited a lot more in the younger years where they didn't have the financial means to be able to kind of help themselves along in life. So when it comes to wealth transfer and the principles and values that drive those decisions, I think the best approach, and this is my own view, but it's also in working with clients and seeing disasters where parents enable their children, they don't develop financial independence, they fund lifestyles. Like, you should not be funding your children's globe-trotting adventures around Greece and paying all their bills for them. And it creates a weird relationship, and it doesn't teach children, adult children, anything about how to live in the real world and live according to a standard of living or a lifestyle that is in line with their own means. It's living off of their parents. So we want to avoid that, and it creates real problems for both the parents and the children and the relationship there. So we want to transfer wealth to children. If there is wealth to transfer, we want to do that thoughtfully. And after we know that they have the wisdom and the capability to handle that money appropriately. So I think lifetime giving is a great way to pay attention. How are they using these gifts that you're giving them? Are they able to handle it in a responsible way? Are they using it for legitimate good reasons, or are they using it to fund a luxurious lifestyle that they can't afford on their own? So how they use these lifetime gifts that you provide is going to point to how they would use an inheritance. You want to be careful not to be like manipulative, like, oh, if you don't do this, then I'm cutting you out of the will. And that kind of stuff is not good. But you can pay attention to how they use gifts that you provide over their lifetime. Or if you're helping them to pay for something, are you expecting your children to work while they're in school to help pay for their own expenses? Like, maybe if you're helping to pay for their basic expenses and tuition and room and board and all of that, that's fine. I'm not saying you shouldn't do that. But are you also paying for them to go out with their friends every Friday night? Or are they expected to work while in school so that they learn how to pay for some of those discretionary expenses? So I think that there's an important balance that you can strike where if you're going to help your children pay for college, help them with some of their living expenses in young adulthood, what kind of incentives are you creating? Are you just putting money in their bank account a couple times a month, like a regular paycheck? Or are they required to meet a certain set of guidelines? Like, are they required to get a certain set of grades in school if they're still in school? Are they required to work to pay for their discretionary expenses? These are all things that you can teach them, and also pay attention to how are they becoming responsible adults that can handle a larger inheritance later in life. Also, you don't have to give money to your children. A lot of children, even adult children, would be better off to not receive a large inheritance or any inheritance at all. That seems cruel, but I can tell you many, many ways that this has gone sideways, especially if there's dysfunction or any type of addiction or even just a spending problem. It's like giving an addict an insane amount of drugs and telling them to, here you go, just OD right now. And you see it disappear in the blink of an eye. And we don't want that as well. That doesn't help them. And it certainly is a cruel way to dispense of the inheritance that you spent your lifetime building. So we want to avoid all of those things. And so we want to be very thoughtful when it comes to wealth transfer, estate planning. Make sure that we're paying attention to how they use lifetime gifts when giving at the last point of which you can give, which is in the inheritance process. All right, that's it for today. Thank you so much for listening. My name is Ashley Micciche, and this is the Retirement Quick Tips Podcast.